In this video, we will solve exercises on how to prepare financial statements from adjusted trial balance. We will solve exercises on how to prepare closing entries. And finally, we will solve a comprehensive exercise that complete all steps in accounting cycle. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. So let us look into the first exercise. The income statement for the Timberline Golf Club Incorporation for the month ended July 31st shows service revenue, salaries and wages, maintenance, income tax expense. The statement of the retained earnings shows an opening balance for retained earning of 20,000 and dividends is 1,300. Now we have to prepare closing entries and what is the ending balance in retained earnings. So here we have the closing entries. We have to close the service revenue, and to close the service revenue is debit by 16,000 and income summary is credit by 16,000. We have to close the expenses, that is salaries expense, maintenance and repairs and income tax expense. So these expenses are going to be credit by 8,400, 2,500 and 1,000. And the income summary will be debit by the total of this credit, that is 11,900. Next, we are going to close the income summary account, and to close the income summary account we know that the total revenue is 16,000 and the total expenses is 11,900, so the difference is 4,100. So income summary is going to be closed by debiting it by 4,100 and retained earning is going to be credited by 4,100. There is dividend for 1,300 and this is also a temporary account, and to close dividend, dividend has to be credited by 1,300 and retained earning will be debit by 1,300. So we have recorded all the required journal entries, closing journal entries. We look at the ending balance in retained earning. Now for the income summary, we can see that service revenue income summary was credited by 16,000 and income summary was debit for expenses by 11,900. So the net income was 4,100. That is what we have recorded over here. For the retained earning on July 1st, the beginning balance is 20,000. And then we have credited the retained earning by 4,100 and we have also closed the dividend by debiting retained earning by 1,300. So the balance now is 22,800. Let us move on to the next exercise. Now indicate in which financial statement each of the following adjusted trial balance accounts would be represented. Now service revenue is going to be for the income statement and so will be the utilities expense, while notes payable, common stock, accounts receivable, accumulated depreciation, they will be recorded in the balance sheet. Next, let us look into the next exercise. After closing revenues and expenses, Natraj company shows the following account balances: dividend, retained earning, and income summary. We have to prepare the remaining closing entries at December 31st. So we are going to close the income summary, and income summary has a credit balance. To close it, it has to be reversed. The income summary will be debited by 36,000 and retained earning will be credited by 36,000. Then we have to close the dividend as well. So retained earning is going to be debited now by 22,000 to close the dividend, and dividends will be credited by 22,000. Let us move on to the next exercise. The trial balance shown below are before and after adjustments. This is the information before the adjustment, and this is the information after the adjustment for Amit company at the end of its fiscal year. Um, and these are the instructions. We have to prepare the adjusting entries that were made. Let us first of all look into the adjusting entries, and let us see where we have. Now you can see that account receivable has increased from 8,800 to 9,400, so there is an increase of 600. So this has to be adjusted. Then we can see supplies, they have decreased by 2,000, so this has to be credited. We will record it in a while. We can look at the prepaid insurance. This has decreased by 1,500. Then there is a increase in accumulated depreciation by 1,200. Then salaries and wages payable have increased by 1,100, and finally unearned rent revenue has decreased by 1,000. So increase in accounts receivable. So accounts receivable is going to be debit by 600, and service revenue will be credited by 600. In the case of supplies, they have decreased by 2,000. So supplies is credit by 2,000, and supplies expense is debit by 2,000. Then prepaid insurance has decreased by 1,500. So prepaid insurance is credit by 1,500, and insurance expense is debit by 1,500. Depreciation expense have increased by 1,200. So depreciation expense is debit by 1,200, and accumulated depreciation is credit by 1,200. Then there is an increase in salaries and wages payable. So salaries and wages payable is debit by 1,100, and salaries and wages expense is debit by 1,100. Then finally we have the unearned rent revenue. This has decreased by 1,000. That means they have earned the revenue by 1,000. So unearned rent revenue is debit, and rent revenue is credit by 1,000. So this completes part A. Part B, we have to prepare the income statement, retained earnings statement for the year, and the classified balance sheet. So let us see how we do it, and we are going to use the after adjustment trial balance to prepare the income statement. Now for the income statement, we have two revenues, 34,600 and 13,100. So the total is 47,700. Then we have the expenses, and under the expenses we can see we have salaries and wages expense 18,100. We have rent expense, and rent expense is 10,800. Then we have supplies expense 2,000. Insurance expense is 1,500, and depreciation expense is 1,200. So the total expenses is the total of all these expenses, that is 33,600, and the net income is total revenue minus total expense, that is 14,100. From this, we are going to prepare the retained earning statement now. So for the retained earning, we have the beginning retained earning uh, as 5,500. To this we add 5,500. To this we will add the net income 14,100. That makes 19,600, and we will subtract the dividend, and dividend is 2,800. So the retained earning is going to be 16,800. So we have prepared the retained earning statement, and we have to prepare a classified balance sheet. So let us see how we do that. Now to prepare a classified balance sheet, we will look into again the after adjustments. Cash is 10,900. Accounts receivable is 9,400. Supplies is 500. Prepaid insurance is 2,500. So the total current assets is 23,300. Then equipment is 16,000. And from this we will subtract the accumulated depreciation, that is 4,800. So the value of equipment is 11,200, and the total assets will be the total of current assets and equipment, that is 34,500. Next, we are going to record the liabilities and stockholder equity. And since this is a classified balance sheet, we start with the current assets. And for the current assets, we have accounts payable 5,800. Then we have salaries and wages payable 1,100. Then we have unearned unearned rent revenue, and unearned rent revenue is 800. So the total current assets is the total of all these items, that is equal to 7,700. Then we have the common stock, and the common stock is 10,000. Retained earning, we have already calculated. The ending retained earning is 16,800. So the total stockholders equity is 26,800, and the total for the liabilities and the stockholder equity is 34,500. And you can see that the total of the liabilities and stockholder equity is equal to the total of the assets. So mathematically we have done it correct. Next, we have to prepare the part C, and we have to prepare the closing entries. And to close the entries, we close all the temporary accounts, that is all the revenues, all the expenses, and the dividend and the income summary. So these are the 4 accounts to be closed. We start first of all with the revenue, and you can see we will be closing the revenue of 34,600, and 13,100. And when we close revenue is debit, and income summary will be credit by the total of this revenue, that is 47,700. Then we will be closing all the expenses. We have salaries and wages expense 18,100, and when we close salaries and wages, any expense, it has to be credited, that is 18,100 is credit. Then we have the rent expense of 10,800, this is also credit. Then we have supplies expense credit by 2,000. Then we have insurance expense credit by 1,500. Then we have the depreciation expense of 200, and to close it, depreciation expense is also credit. And the total of all these accounts is 33,600. Now, we have to close the income summary, and to close the income summary, we will now if we make the income summary T account, it is credit by 47,700, and the income summary is debit by 33,600. That means that the balance is how much? 14,100. And to close this balance, that we have to debit the income summary by 14,100. So income summary is debit by 14,100, and to close we will be crediting the retained earning by the same amount, 14,100. Finally, we have to close the dividend, and the dividend is 2,800. And to close the dividend, retained earning will be debit by 2,800, and dividend will be credit by 2,800. So we have prepared the closing entries for the temporary accounts, and now let us go to a comprehensive exercise. Now, Dana LaFonce opened Pro Window Washing Incorporation on July 1, 2022. During July, the following transactions were completed. We have a set of transactions over here from July 1 to this date. And we have to use the following chart of accounts. And the first thing we have to do is we have to journalize these transactions. So the first transaction, you can see, issued 12,000 shares of common stock for 12,000 cash. So cash is debit by 12,000, and common stock is credit by 12,000. Then they have purchased a truck for 8,000. So equipment is debit by 8,000, and we are paying cash 2,000. So cash is credit by 2,000, and the balance is accounts payable. Then they are purchasing supplies on account. So supplies is debit by 900, and accounts payable is credit by 900. Then we have paid insurance in advance. So prepaid insurance is debit by 1,800, and cash is credit by 1,800. Next we have what do we have? Next we have the we have billed a customer for 3,700. So accounts receivable is debit by 3,700, and service revenue is credit by 3,700. Then paid 1,000 cash on amount owed on trucks, and 500 on amount owed on cleaning supplies. So accounts payable is debit by 1,500, and cash is credit by 1,500. Then paid 2,000 cash for employee salaries. So salaries expense is debit by 2,000, and cash is credit by 2,000. Then collected 1,600 cash from customers billed. So we are collecting cash. So cash is debit by 1,600, and accounts receivable is credit by 1600. Then we have billed customer for 2500, so same accounts receivable is debit by 2500 and service revenue is credit by 2500. Paid 290 for maintenance of the truck during the month, so that is maintenance and repair expense 290 and cash is credit by 290. You can see that we have this is the account title that we have to use. Then declared and paid 600 cash dividend, so dividend is debit by 600 and we are paying cash, so cash is credit by 600. Okay, now we have to post to the ledger account. Now we have these we have recorded the journal entries and they have to be posted to the T account. So let us go to the next slide, and you can see that I have put all the journal entries through an Excel sheet. And what you can see is if you find difficulty in reading my numbers or something, so from here we are going to prepare the T account, that is part number B, post to the ledger account. So cash is on July 1. Cash is debit by, let me make it a little bit. Okay, so cash is debit by 12,000 and common stock is credit by 12,000. Then equipment on July 1, so we have an equipment account on July 1 and equipment is debit by 8,000. Accounts payable is credit by 6,000 and cash is credit by 2,000. Then we have supplies. Supplies is debit by 900 and accounts payable is credit by 900. Then we have prepaid insurance, and prepaid insurance is debit by 1800 and cash is credit by 1800. Sorry, the date is I think I have put the wrong dates. Give me a minute. Okay. So for accounts payable, 6,000, the date is 1st of July. And then supplies is 3rd of July. Accounts payable is credit again and the date is 3rd of July. Then we have prepaid insurance, 5th of July. Equipment is 1st of July. And then cash is credit on 1st of July and prepaid cash is credit on 5th of July as well. Okay, now we move on to number 12. Accounts receivable is debit by July 12. Account receivable is debit by 3,700 and service revenue is credit on 12th of July by 3,700. Okay. Next we have accounts payable debit by 1,500. The date is 18th 1,500 and cash is credit by 1,500 and the date is, what is the date? 18th 1,500. Okay, then we have salaries and wages expense is debit by 2,100. The date is 20th of July 2000 and cash is credited by 2000. Then we have now we have 21st of July, cash is debit by on 21st of July, cash is debit by 1600 and accounts receivable is credited by 1600. Then accounts receivable is debit on 25th by 2500 and service revenue on 25th is credit by 2500. Then maintenance and repairs is 31st of July is debit by 290 and cash is credit on 31st of July by 290. Then we have dividend, and dividend is debit by 600 and the date is 31st of July 600 and cash is credit on 31st July by 600. So now if we determine the balance for cash will be 5410. The balance for accounts payable will be, now this is on at the end of the month, so 31st of July, that will be 5400. Accounts receivable, the balance is on 31st of July and that will be 4600. Common stock on 31st of July is 12,000. Supplies as of now is 900. Prepaid insurance, equipment, maintenance, and then we have dividends, service revenue, and then salaries. So we have recorded all the general entries that are required. You may be observing that there are other accounts like accumulated depreciation, supplies expense. We will be using these accounts as we progress in this exercise. Okay. So once again, I have put the balances in through an Excel sheet in case you find difficulty in reading my handwriting. So, but this is simply a copy of what we have done over here, and let us see what is next. So we have posted them, and now we have to prepare a trial balance. And to prepare the trial balance, we have already made the T account and we prepare the trial balance now. Now the cash balance is 5410. Accounts receivable, the balance is 4600. Supplies is 900. Prepaid insurance is 1800. Equipment is 8000. Accumulated depreciation, nothing is there right now, so don't worry for this. You can see it is a blank. Maintain accounts payable is 5400. Then salaries and wages payable is, oops, I have made a mistake over here. Salaries and wages payable, no, nothing is there, thank God. So salaries and wages payable, you can see nothing is there for the salaries and wages payable. Then common stock is for 12,000, it has a credit balance. Dividends is debit for 600. Service revenue, if we make the total, the service revenue will be 6200. Maintenance and repair expense, debit 290. Then we have the supplies expense, nothing is there. Depreciation expense, nothing is there. We will be using these accounts as we progress, as I have said. So insurance expense, nothing is there for the insurance expense. Then salaries and wages expense is 2000. So now we make the total, and the total is 23,600, and this one is also 23,600. So since the trial balance, the debit is equal to the credit, that means mathematically the trial balance or our recording is correct so far. So we have prepared the trial balance, and now they say journalize the following adjustments. We have to journalize these adjustments now. So let us see how we do that. Now, the first is service provided but unbilled and uncollected. So, account receivable is debit and service revenue is credit by 1700. Depreciation on equipment is 180. So, depreciation expense is debit and accumulated depreciation is credit. 1/12 of the insurance expire, and you can see that we have made the paid 1800. So 1/12 of 1800 is 150. So insurance expense is debit and prepaid insurance is credit. Inventory count shows 320, and in the beginning we have it was showing 900. So 900 minus 320 is 580. So supplies expense is debit by 580 and supplies is credit by 580. Accrued but unpaid employees salary were 500. So salaries expense is debit by 400, and salaries and wages payable is credit by 400. So we have done part number what instructions, and so we have generalized these adjustments, and we move on to number E. We have to post the adjusting entries to the T account. So we are going to use the T account that we have already prepared over here, and I have simply copied this T account through an Excel sheet. It is the same that we have done over here for just now, and we have recorded the adjusting entries. So we will be adding these adjusting entries into our T account. Now you can see that account receivable is debit by 1700. So we have 1700 over here. Service revenue is credit by now July now, and obviously adjusting entries are done at the end of the period. So all the adjusting entries are on 31st July, that is 1700. Then we have depreciation expense, and depreciation expense is 180. Again 31st of July 180. Accumulated depreciation 31st July 180. Then we have insurance expense 31st July, that is 580, and supplies is credit by 580. Then we have salaries and wages expense 400, 31st of July 400, and salaries and wages payable is credit on 31st of July by 400. So we have recorded we have posted all the adjusting entries to the T account, and we have to prepare an adjusted trial balance. So once again, I have put this T account into an Excel sheet, and that's how the T account looks like. And from here, we are going to prepare the, what they say, prepare the adjusted trial balance. Now we have already recorded the before adjustment trial balance just now. This was before the adjustment, and now we are going to do after the adjustment. So let us see how we do that. Now we have cash for um, uh, five 5,410. Then we have the accounts receivable, and accounts receivable is 6,300. We have prepaid insurance 1650. We have supplies 320. Then we have equipment 8,000. We have accumulated depreciation 180. Then we have accounts payable, and accounts payable is 5,400. Then we have salaries and wages payable, and salaries and wages payable is 400. Then we have common stock 12,000. Then we have dividends, and dividend is how much? Dividend is 600. Then we have service revenue, and service revenue now is 7,900. Maintenance, it has a balance of 290. Supplies expense is 580. Then we have depreciation expense. Depreciation expense is 180. Insurance expense is 150. And finally, we have salaries and wages expense, and that is 2,400. So now if we make the total for debit is 25,880, and the same is the total for 25,880. So the two sides are equal, so mathematically it is correct. Let us move on to the next part. They say prepare the income statement and a retained earning statement for July and a classified balance sheet. So once again we are going to use this. Now we are going to use the after adjustment trial balance, and I have put these numbers again in a through the computer, and we will be using these values now to prepare the income statement and all. It is the same. I have simply copied these numbers through the computer in an Excel sheet, and now we can see how we do that. Now the service revenue that we have can see over here is 7,900. Then we have all the expenses, salaries and wages expense. Now salaries and wages expense is 2,400. Then we have supplies expense 580. Then we have maintenance and repair 290. Then we have depreciation expense 180. We have insurance expense 150. We have no other expense other than these, and the total of these expenses is 3,600, and the net income will be total revenue minus total expense, that is 4,300. Now the beginning retained earning is 0, and the net income is 4,300. So the total is 4,300. From this we are going to subtract the dividend of 600. So the retained earning at the end of the month is 3700. So we have prepared the income statement and the retained earning statement, and now we have to prepare the classified balance sheet. So let us move on to the next slide. Now for the balance sheet, again we are going to use the after adjustment debit and credit balances. Now cash is 5410, accounts receivable is 6300, supplies is 320, a prepaid insurance is 1650, so the total is 13680. Then we have property, plant and equipment, and under property, plant and equipment we have only equipment for 8000. From this we will be subtracting the accumulated depreciation, and accumulated depreciation is 180, so it is 7000, 7820. So the total will be total of current assets plus total of equipment, that is 21500. Next, we record the current liabilities, and for this we have the accounts payable 5400. Then we have salaries and wages payable 400. So the total current liabilities is 5800. Then we have the common stock, and the common stock is 12,000. Retained earning we have already calculated before, that is 3700. We add this over here, 3700. So the total stockholder equity is 15,700, and if we make the total of liabilities and the stockholder equity, that is 21,500. And once again mathematically the balance sheet is correct. Okay, let us see what is next. So now we have to journalize and post closing entries and complete the journalize and post. So we have to first of all journalize the closing entries, and we have to complete the process. So let us see what we do now. So to close, obviously, once again, we are going to close the 4 accounts. We will be closing all the revenue, all the expenses, income summary, and the retained earning. Now, service revenue is 7,900. To close this, it has to be debited, and income summary will be credited. Then all the expenses are going to be credited. Now salaries and wages expense is 2400. It will be credit now to be closing. To close it, supplies expense 580, depreciation expense 180, maintenance and repair 290, insurance is 150. So the total of all these expenses is 3600. Now if we make the T account for the income summary account, income summary is credit by 7900, and income summary is debit by 3600. So the balance is 4300, and to close this, income summary has to be debited by 4300, and we will credit the retained earning. And finally we have to close the dividend, and the dividend is 600. So dividend is credit to close it, and retained earning will be debit by 600. Okay, So we have done the closing, and then they say prepare a post closing trial balance. So before we do that, we have to close the ledger, and we have just now closed the journal entries. I have simply put them over here, and we have the we have the ledger, and we will be recording these closing entries. Now service revenue is debit by 7,900. So this is recorded on the debit side, it is debit, and this will be on 31st. Now you can see that this balance is going to be 0 now. Now we are going to close the all the so income summary we have over here, and that is credit by 7,900, and now income summary is debit by 3,600. Then we have to close all the we have closed all the expenses, salaries and wages expense, that is 2,400. And once we credit salaries and wages expense, the balance becomes 0 now. Then we have the supplies expense, this is credit, and the date is 31st July. And once again the balance becomes 0. Depreciation expense is 180, credit, so the balance becomes 0. Maintenance and repair is credit by 31st by 290, this balance also becomes 0. Insurance expense is 1 credit by 150, so this balance also becomes 0. Now so income for the income summary, now we have a balance of 4,300, and to close this we have to debit the income summary by 4,300. So if we debit this by 4,300, the income summary balance will be 0 now, and retained earning is credit by 31st of July by 4,300. Next we have to close that we have closed the dividend, and dividend is credit by 600, so 31st of July, and this balance becomes 0 now. And retained earning is credit by 600, is debit by 600 on 31st of July, and the balance now is 3,700. And this is what we have calculated the balance for the retained earning before, and this is just a way to verify that we have done it correctly. Okay, so once we have made all the adjustments in the ledger, I have simply put this ledger over in an Excel sheet, and now we are going to prepare the post closing trial balance. Now when we are putting the post closing trial balance, don't forget that all the temporary accounts, since they are going to have a 0 balance, that is revenue, expenses and the dividend, so we have only the assets, liability, stockholder equity and retained earning. So we have cash 5,410, 410. We have accounts receivable 6,300. Then we have supplies 320. Prepaid insurance 1650. Equipment is 8,000. Accumulated depreciation is 180. Accounts payable is, how much is accounts payable? 5,400. Salaries and wages payable 400. Common stock is 12,000. and retained earning is 3,700. So once we make the total is 21,680, and since the two sides are equal, so mathematically, as I say, the post closing trial balance is correct. So this completes the fifth video on accrual accounting. I hope you have enjoyed this presentation, and if you have found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.